What's going on, everybody? This is We the People, a real estate podcast. Let's begin. How's it going, everybody? Beautiful people of the Tampa Bay area. It's episode 6 of the We the People Real Estate Podcast with your man, Carlos Rojas, real estate agent here in the Tampa Bay area and licensed in Florida with Frank the Bank.
Thank you, Carlos. Welcome to We the People podcast. We are a couple people, but you are the people.
That's right. That's right. And here we're going to talk today about a few important topics that have to do with real estate. So we're going to begin with the rates. As always, there has been a slight change from last week. We also will be getting into a new news report coming from Florida Realtor's website and from New York that states that the Florida cities will see a home price drop. Ooh. We're going to be talking and debating about that a little bit. And Frank is going to give you guys some guidance on, remind me, Frank?
Investment financing, all kinds of different options when you want to be an investor. And we're going to talk about all of those on today's show.
That is correct. So, guys, just want to let you know, I'm a real estate agent here in the Tampa Bay area. I sponsor myself on this program. RealtorCarlosRojas.com is my website. If you guys are looking to buy real estate in the Tampa Bay area or sell your home anywhere in Florida, I'll get on a plane and meet you anywhere in Florida. Okay, I'm a hustler, and I'll get there and I'll get it sold for the price that best finds your needs. And Frank here, owner of Lincoln Lending. Go ahead, Frank. You talk about yourself.
What, you think I like to talk? Frank the Bank here, guys, owner of Lincoln Lending Group. 2023 was our 20th year anniversary in business right here in sunny Tampa Bay. We are a Florida specialty lender. Yeah, we can handle things all across the whole country, but we really like taking care of our Floridians. I was super excited when Carlos created this podcast because I think we can bring a lot of valuable information. Lincoln Lending is a no-fee mortgage lender, which means we don't have any set junk fees, and we have every single product. So that's what we're going to be talking about today, specifically about products to become a real estate investor.
That's right. And next week, if YouTube allows us, we will be going live. So you guys can literally comment live on the program, and we might be able to answer some of those questions for you live if you have those questions. If you are not live with us, which today you're not, because I'm releasing this program after the recording, just leave us the questions on the comments, like, share, subscribe if you like real estate topics and stuff. We're going to be talking specifically to our Floridians and also sometimes news around all of the United States.
Yeah, that's right.
Maybe the world if we need to. Right?
Maybe the universe.
That's right.
You never know. We'll send this wherever they're going to listen.
Right? That's right. So welcome again, and let's go ahead and get started, guys. First things first, we're going to talk about the rates. So let me go ahead and pull it up here for you. We have
and by the way, I never look at this before Carlos pulls it up. Every single time, I only see it in the studio. Whoa, surprise.
That's right. We have an increase in rates for the first time since we started the program.
We do. So what's going on with the rates? I'm gonna tell you there's a reason that these rates went up. All right. The Fed met.
It's Joe Biden's fault, Frank.
It's always Joe Biden's fault.
I just blame Joe Biden for some reason.
Listen, FJB.
This is Joe Biden's fault. I'm like the sticker everywhere.
Have you seen those on the gas pumps? That's actually pretty funny. My kids saw those recently. They're like, what is that? I'm like, that's the reason Daddy can't buy you toys.
I watch Bill Mayer. You know who Bill Mayer from HBO? Yeah. And Patrick Bet-David had did you see that?
I sure did. And
oh man, it was like, why are you still defending Joe Biden? I don't understand. And I do like Bill Mayer because as a Democrat, he does brings a lot of points.
He's real.
But the point is, I don't know. I just want to look at it from this show as a real estate, precedent. Who would benefit us better? And right now, Joe Biden is just not doing it for us, in my opinion.
Real estate, gas prices, egg prices, inflation. There's nothing how about the border wall? I mean, we're not talking about real estate. I guess we are. It is real estate. But this thing, now they want to pass legislation to close the border. How about you just close the border?
Yeah.
I don't think you need legislation. Just get the job done.
But rates. Okay. Let's get into the topic.
So the rates this week, it says 7.572, right? Last week's podcast, we were at 7.47. All right. So it's not a huge increase, but as Carlos said, it is the first increase we have had in a couple months of doing this show. It's 6 episodes, right? Yep. So why? Everybody's asking me why, because from the mortgage world, the increase was actually pretty significant. The one thing I always like to point out when we talk about the rates on the show is that The rates that you're seeing on Google, that's not reality. And this is why the market is not making a huge change right now. It's why we have not seen so many people jumping into the market, because they're still telling you the rates are in the sevens. They are not. So I have to start with that. And then I'm going to tell you why they went up. But the actual rates right now are in the low to mid sixes on a conventional loan.
Okay.
And they're in the fives on a government, which means FHA or VA.
Yeah.
Okay. So number one, don't believe what Google says, because any banker, any broker should be able to get you into the sixes or the fives
That's
now.
right.
So you're still good. Why did they go up? Last, what was it? Thursday, I believe
Yes.
the Fed met. Okay.
Well, we spoke about that in the last podcast.
Right.
We were going to talk
Remember,
about
we were going to talk?
the Fed meeting. That's right.
Yep. And they met after we did the podcast.
We didn't even plan for this, but I'm glad we reminded.
No.
So what happened there? Go ahead.
So they decided not to lower rates.
Okay.
Now, they didn't raise them either. Okay.
So why are they up?
Because the next day, the jobless report, the unemployment report came out.
Okay.
And this sounds crazy, guys, but it was a very positive unemployment report, meaning it showed a lot more people have jobs. It shows less unemployment. Therefore, it shows a better economy. Technically, we can talk about whether it's real or not.
Yeah.
And therefore, the rates went up because they're like, oh, everything's good. Well, let's raise the rates, right? When things are bad, let's lower the rates, right?
Yeah.
So here's the thing.
So how come, and I'm sorry.
Go,
to
no,
interrupt,
please go.
How come when Trump was in presidency, and then just a question for you, what do you think about
Sure.
this? Because obviously I don't know the, back behind the room details
Right.
of things, right? But I know you know a lot more of them. Why, when Trump was in presidency, we had good economy and also the rates were so low? How do you accomplish that?
Confidence in the economy.
Okay.
Consumer confidence. So when Trump was in, he was lowering taxes for big business. He was bringing companies, U.S. companies from overseas back to America by giving incentives.
Right.
And when you bring businesses to America, the huge businesses, what do? You have less unemployment.
Okay.
So the thing is, we never had the problems during Trump. You never had inflation.
Right.
You never had high unemployment. You had extra low interest rates. I will say that. But
Right.
that was...
I mean, I've never seen 2.0s.
Yeah,
like
that was more like kind of caused by COVID, though.
Yeah.
You know, that was really that, and that wasn't Trump as much. But it really comes down to confidence in the economy. When you have confidence, then people spend money, right? When you don't have confidence and then you have inflation, people don't spend money,
Okay.
right? So it's simple as that. And Biden's rules and the tax things that he's changed, I mean, basically, he went into the White House and said, I'm just going to do everything the opposite of Trump did. Dude, the guy, listen, I kind of like he did, because he would have a much better chance of getting reelected if he had literally just left everything alone and gone and done his crazy social policies and whatever,
Yeah.
not change the border, not change anything in the economy. We wouldn't be in this position, and he probably would be a shoe-in to get reelected.
All right. He looked a lot better.
He had the easiest job in the world.
Right.
You know, go in and, it's like you buy a business that's highly successful, okay? And you go in and you change everything and you lose money.
Yeah.
What did you do wrong?
Yeah.
You changed the formula.
Yeah.
That's all that happened.
The
So
formula to make money.
yeah. Well, all of us were better off during Trump. There's no question. And I think a lot of people on this next election are going to look past the do I like him or not, and they're going to just remember what was my life like 4 years ago or 5 years ago, and what was it like in the last 4 years.
Yeah.
Right. So these rates, they went up because jobless reports came out and said that there's less unemployment. Therefore, they raised the rates, and it was pretty significant on the wholesale mortgage side. So this is a retail rate, right? 7.542, which means it's got a lot of money built into it.
Okay.
On the wholesale side, we're in the sixes. So what happened was a guy who was at 6.25 on Friday probably was automatically at 6.5 on Monday.
Yeah.
Right. It was a pretty significant difference, even though you and I only saw about 1/8 of a point increase.
Yeah.
So what is my advice? I still say you need to probably lock in. Right now, we told a couple people float, because I think they already came down actually.
What do you mean by float?
Oh, okay, great
What does
question.
that mean?
So when you're doing a mortgage, your mortgage lender or broker or banker is going to give you a choice. They're going to say, hey, Carlos, you're under contract. You got a 30-day closing. We can lock your rate today at, let's say, 7.542.
Okay.
Or we can do what's called float. Okay, it's a gamble. It's saying, hey, Carlos, do you think that the rates are going to go down over the next 30 days? And if you think so, then you're going to say, no, I don't want to lock today. I would float. So I would not recommend somebody to lock yesterday or today. Well, maybe today is okay because you want the rates to be on the down when you lock, not on the up. So they went up Friday. They went up Monday. You don't want to lock right after they went up, you want to wait a little bit.
Yeah.
But it's a gamble. It's like anything else. If you wait, you can't control it. It might go up. It might go down.
Understandably so.
Right. So locking, I'm a big fan of locking. I tell the people lock. By the way, here's the difference in Lincoln Lending and a broker, what they can do for you. I can tell my clients to lock today and preserve their rate. So let's say I lock them at 6.5 today.
Okay.
And then over the next week or so, the rates go down. I can either do what's called a float down and actually drop their rate, or if they go down a lot, I can pull their loan from that underwriter, submit it to a whole new underwriter with a lower lock.
Nice.
If you work with a bank, Bank of America, Wells Fargo, Regions, whatever,
They're
you
not
can't
gonna
do
do
that.
that. Yeah.
You would literally have to go get all your paperwork, take it to a whole new bank and start
They're
over.
already slow as it is. I've worked
Oh,
with
yeah.
those banks, and it's very slow, very hard to deal with.
Yeah.
Yeah, don't buy with those banks, guys. We got the professionals here available to help you secure a good mortgage or refinance on
Or
your home
refinance.
if you need to do that.
By the way, real quick, you brought it up. It's your fault. Refinance. There's a special that we're running right now on refinances. On refinance, it's a special. So one of our biggest lenders is trying to corner the market on refinances. So the owner, the CEO, who's also the owner of the Phoenix Suns, by the way,
Oh, nice.
billionaire, he decided to disrupt the market a couple weeks ago. And what he said was,
You told me about that.
right?
Yeah.
Anybody who is, last month, there was anybody who was an FHA or VA loan, he gave an extra point off the interest rate for you to refi. This month, starting a few days ago, he's doing it on conventional loans.
Okay.
So anybody in a conventional loan who's been in their mortgage for a few months and they want to get a lower rate, we're offering almost a whole 1-point discount on rates. So we should definitely be in the low 6s for you if you need to refinance.
Okay.
Go to contactfrankthebank.com. Easiest thing in the world. It's not an application. It'll get you the info. Get in front of us. Contactfrankthebank.com.
That's right. Frank, I wanted to ask you another question. This is again off the small little agenda we had to start the program. So I've been getting this question a lot lately, and I just want you to, as a lender, just answer it for the people here. I keep getting asked about the program, first-time home buyers program with the Heroes discount.
Hometown Heroes.
Right. It seems to me that they've ran out of money again. Is that so? And why does that happen? Why do they constantly promote something that constantly runs out of money again, so that people can truly understand how some of these programs work? You know, because they think sometimes it's the realtor you have or the mortgage lender you have that can't get it for you, and that's not how it works, right?
No. So Hometown Heroes is a loan product. It's actually a down payment assistance product is in reality what it is.
Okay.
It was created by the state of Florida. Governor DeSantis created this, and he appropriated so far $200 million to it. Okay. The first appropriation was a year ago or so, and they added $100 million. It ran out within just a couple months.
Okay.
They have to go back to the Senate and to all that, and they have to get permission, obviously in the budget to do it again.
Okay.
So they did it a few months ago, reappropriated another $100 million. It lasted a little longer this time than it did the last time because there's less activity in the market. But it is technically out of money, but it's not, okay? So the $100 million is technically committed, right? What that means is brokers and bankers have gone on the website and said, Mr. Smith would like his $25,000. And it's happened so many times, they've used up the $100 million, right?
Okay.
But every other Tuesday, they come out and they release money. And what that is, let's say I locked in Mr. Smith for the money, but then Mr. Smith cancels his contract or can't close or something like that, the money gets released. So there's a few million every other week that's getting released. So the money's not technically gone. It's just needing to be reappropriated. And because it's been so successful in the state of Florida, we fully expect them to refund it again.
Okay.
But it could be a few months before we see that. So the big question everybody probably is thinking now is, okay, well, that was a big help for our down payment assistance. What do we do now, right?
Okay. Let me ask you this. Is the money that's coming in, is that something that they have to pay back?
No.
So it's completely free.
Completely free money on the Hometown Heroes product. There are some things where you can't refinance or sell within a short amount of time. A lot of those programs have some sort of little caveat to that.
Okay.
But you're not making a payment on it. It's not a second mortgage.
And the rate is
Your interest rate, so that's the beauty of the Hometown Hero money. Your rate is whatever your rate's going to be, whatever you're qualified for. It doesn't affect your interest rate.
Okay.
So if I can get you 5.75 on an FHA loan, you can use the Hometown Heroes.
Okay.
And you don't have to be a veteran. You don't have to be a specific type of worker. That's when it first came out. It's called Hometown Heroes because you had to be like a nurse or a doctor or a fireman or a policeman. They opened it up on the second 100 million to everybody.
Okay, so if I'm a buyer right now and I want to take advantage of that program when the funds are available,
Sure.
I need to get pre-approved today.
Yes, you have to still get pre-approved for a mortgage.
Right. So I do the pre-approval process, and then maybe I just wait to see when that happens.
So here's what I'm going to tell you exactly what we're doing for people right now, because this is definitely an important question is we're getting the application. We're getting you approved because you have to be approved to even request the money, right?
Right.
We're going to go in with the intention that we're going to try to get you the $25,000.
Okay.
But we're going to approve you for a different product at the same time.
Okay.
Because you're coming in really needing this for either your down payment or closing cost,
Okay.
right? So we have 100% FHA product.
Okay.
And we have a grant product on a conventional product as well.
Okay.
So we are going to approve you for that in addition to just the regular FHA or VA or conventional loan.
Okay.
What I've done there is for you as the realtor, let's say I pre-approve your client. Now you and your client can go shopping immediately.
Yeah.
And you know you have this financing available.
Okay.
The next Tuesday, when they appropriate money or they release money, we check. If money's there, boom, we lock your client in. Now, instead of doing the 100% product, we're back to doing the Hometown Heroes product.
Got it.
Why does that matter? Because the terms are a little bit better when you're not doing the 100% product or when you're not doing the grant. If I can just do a regular FHA, VA, or conventional, you get a little bit of better terms using the Hometown Hero. But let's say you find them the house and we go in that second Tuesday and there's no money.
Yeah.
And now they don't want to lose the house.
Yeah.
So now you write a contract using the other product.
Right.
Right.
So I always prepare my buyers. I mean, I do not personally like to just focus on this product. There are buyers out there that are, I call them numbers buyers. They don't really care about the house as much as they care about the numbers.
Right.
Which to me is, a little bit complicated in terms of what you're buying. Because I like teaching people about the resale value when they're buying a house, understanding that, the location of the property, the type of property it has, whether it has a big backyard or not, whether it has a pool or not, or even the space to put one in, the size of the doors, the windows, the space of the kitchen, little things that really matter within your budget that are going to be actually more important one day and give you more money back than what you can save on,
Marry the house,
doing that,
date
right.
the rate.
Right. So I would tell you, if you're buying, I would get away, take out of your mind any of the help situations, just so that you're prepared to buy a house. Focus on buying a house, enjoying the house, but at the same time, we're not saying no. These programs are not available to you. If during the time that you actually find the house that you want, this program is available, then great. And if you just want to focus on the numbers and buy that way, great. We'll let you know, hey, this is the time, but now we got to find a house during that specific time, which is more complicated than actually just finding a house at whatever time you actually need and you can actually see and stuff like that.
Yeah, you need to be ready to pull the trigger because there is not a lot of inventory out there right now. And when Carlos goes and finds you the right spot, you can't go and apply then. So just make sure you get your pre-approval done now. And for example, we don't charge anything. Again, I'll say contact frankthebank.com. That's where you go. It will trigger us to call you. We figure it out. There's no charge for it. We give Carlos the letter. Let's say the letter's for $300,000, but you find the right place for $350,000. No problem. We go in there and we fix it. We make sure you know the numbers up front, and hopefully we get down payment assistance as well. But like Carlos says, don't focus on it. Focus on finding the right house.
That's right. All right. So on the next topic here, we have news, a forecast coming out of Florida, states that Florida cities to see home price drop. This is a little bit surprising. Let me read it a little bit here for you guys. Home prices in several Florida metro areas have the highest chances of dropping, while prices in other parts of the U.S. will go up through November 2024, according to CoreLogic. CoreLogic is a tool that is used that basically can read a bunch of information according to who manages it. As it states right here at the beginning, it says New York. So this is coming straight out of New York. I just want to start by saying I don't know that anybody from New York, I'm not going to say anybody, but that I would trust any news source coming out of New York. Now, this is coming out of Florida Realtors. So it is a Florida news, but it seems like the writer's coming out of New York, which I don't understand why.
That's what that means. Hey,
Right.
read a very interesting. How about that second sentence? I just noticed CoreLogic prices, the home prices were increased by 2.5% nationwide through November 2024. I would absolutely agree with that. For homeowners in some cities, here we go. You ready? Like Redding, California, and Fairbanks, Alaska, the number is forecasted more than double. Carlos.
Wow. So I skipped that line honestly earlier. That line is more important than the next one. Let's talk about this line right here. So basically, they're stating this is news stating that states that have been going down significantly on prices are now going to be starting to go up. So okay, could it be true? Yeah. I mean, obviously on a chart, if everything's going down, eventually something's going to go, at one point it's going to go up.
Sure.
But it sure seems like this states are just wanting to promote a certain news that is going to make them look better or make you want to think or rethink about maybe moving back to your, California city, as we have had so many people moving from California here, or just invest in these states, which for some people may be a good deal. But for most, according to taxes, especially in some of these places that they're promoting here, it's going to be a big headache, especially businessmen. They don't want to do no business over there. I hear they're turning commercial buildings now into rentals.
Yep.
Have you heard about that?
I have.
Which is, wow, okay, let's go ahead and convert this into rentals. Maybe let's do some Section 8 housing and put all the new immigrants coming in or people that are not making any money. I don't know what they're going to do over there. All I know is, if they're helping people, good for them, but it just seems very fishy, right?
Okay, so you know what popped in my head as soon as I read that line, because I love that we do this, by the way, guys. We don't discuss it beforehand because we want natural reactions from each other. You know what the word pops in my head? Fake news.
Yeah.
I hate to be that guy to say that word again, but fake news. All right. Carlos just said it. Everybody is moving out of California and New York. The numbers do not lie. Yeah. Look them up. Look at census data. Look at the movement data of the people where they're going in the country.
Hey, and I got proof. I helped so many people from up north. Yes. So many people from California. I got friends that have moved from California over here. People in the military. I mean, I've seen it. Yes. In person. I'm not just seeing the news and reading about it like it's happening.
And it didn't happen before. That's how we know we're telling you the truth, because we've been in business. Shoot, I've been in business 25 years. Yeah. Carlos is almost a decade. We have not seen people coming from California ever.
That's right.
And they still are in droves. So no, and come on, dude, Fairbanks, Alaska. Are you shitting me?
Yeah.
Are you shitting me? Fairbanks, Alaska? Yeah. Oh, they're gonna double in real estate value.
Yeah,
who's moving there?
Like that city is even news for the rest of the world right now, even Florida. I don't even understand what. Anyways,
listen, if they're making fake news, they could have done better.
Right?
They couldn't. Don't put Alaska in there, you dummies.
Here's another sentence. Yeah. CoreLogic data shows that the following metro areas have the highest likelihood of home price reductions: Palm Bay, Melbourne, Titusville. Titusville. Sorry,
Titsville. Dude, hold on. I'm moving to Titsville. There's no way values are going down in Titsville. I promise you. Oh, man.
Hey, like we said, we did not plan this. And I'm Cuban, so I may read some things the way that it's said. I mean, it's Titsville to me. I'm just saying. West Palm Beach, Boca Raton, Delray Beach, Florida, Tampa, St. Petersburg, Clearwater, Florida. They already said that is in Florida. Why are they?
They just said that. They just Florida again?
Daytona Beach. Right. All I'm saying is Orlando. No, not Orlando. Ormond Beach. All I'm saying is, and they included town here in Georgia.
I've been there, Roswell, Georgia.
Yeah. So come on, guys. Like, we're talking about some of the major cities here. I mean, let's talk about home prices. They're staying around right now. They're not going down, and people are submitting. I just got some of my listings under contract within $10,000 of the listing price. Some of them have been listing for months, and I did not bring the price down, and they still so close to listing price. I can get you closing costs. It's a great time to buy right now, so that you can maybe buy down some points so that you can have better rates. You will have that options with Frank. once you apply, and we'll present them to you depending on how much closing costs we can get you. I mean, whether you want to keep money when you buy or not, the point is that it's a good time to buy. There are good options out there, but it's not like it's overwhelming like when COVID was here, that everything was just chaotic. It's just a normal, it feels like a normal real estate business right now, where as a realtor, you actually have to compete. You have to get the listings. You have to do the extra work and know the extra knowledge to get things under contract and get things going. But it's not a slow market. It's not like it's a bunch of houses sitting around waiting for somebody to take them. It just feels regular. Maybe your house sits in the market for 2 weeks, maybe a month. It's not going off the shelf in the first 3 days, but prices are staying, good for a lot of people still.
Yeah.
I would say maybe the most hurt will be people that maybe bought, this last 6 months or so, or not the last 6 months, but before that, right before the price drop. But at the end of the day, they're not that far away from where prices are right now. So a year into now, 2 years from now, those prices that they locked in could possibly be a lot lower, than what they actually will be in a couple of years from now. And I strongly believe that.
Another thing to think about is that this stat is absolute bullshit as it is. Okay, because just call your buddies and ask them where they're moving, across the country. 2.5%, 2.5% is nothing. I mean, Carlos, 2.5% on a $500,000 deal. What are we talking? If I didn't do, you're talking like $12,000, $13,000. That's a joke. You know what I mean?
And
that's
guys,
not even a big deal.
The other thing
that's your
is,
closing cost.
I got a bunch of people, a bunch of cash buyers waiting for this market to start crashing, for this market for this news to actually be true.
Right.
So it's not like we're telling you this so that you can go out there and buy. No, it's truly a good time. The fact that if something like this was truly happening, this episode right here would be about, hey guys, prices are going down a lot. Buy a house right now, and instead we're giving you, what we actually think is possibly happening.
Yeah.
We're going to monitor prices as we go along here, in the next months or so, and we will talk about that. But it just seems very unrealistic when we're about to heat up right now. February is already heating up. A lot more applicants are coming in. We're about to spring which is when people make a lot of decisions during spring break, and then the summer is going to come along. I mean, I understand if it was September, the beginning of September, October, November, maybe, which is already slow. But during this time right now, things are going to start picking up. I doubt that this is a real news source that you can actually believe, and you're hearing it here from the We the People podcast, so that and are informed of what's actually going on.
By the way, we live in Florida. And we live in Tampa, St. Pete.
Yeah, we live right in the center.
So we live where they're talking about.
That's right. So besides that, Frank, so I'll leave it up to you now so that we can go into our next topic here, which is
investment loan products.
That's right.
Right. So a lot of you guys are looking to become an investor.
Yep.
And today it's actually, believe it or not, it's a better time to become an investor right now than I've seen in a long time, because there's actually a lot more out there for you. There's a lot more products in the market that you can use to buy an investment property. Okay. One of the big questions we always get asked is if somebody wants to buy multifamily. Okay, they want to buy a multifamily, by the way, is anything that's more than a single house. It's a duplex, a triplex, a quadplex, okay? If they want to become an investor and they don't have money down, that's the big question. You can't get Hometown Heroes money for an investment property, okay? But we have a product. If you're willing to take a couple different steps, you can actually buy a duplex, a 2-unit property with no money out of pocket using the 100% FHA product that we offer, okay? The only caveat is you have to live in one of the units for a year, right? But think about this. If you go out and you work with Carlos and he finds you a duplex and you live in one of those units for one of the year, you got a renter on the other side, right? So I call it doors, right? You got one door, right? One rental. At the end of 11 months, 10 months, Carlos goes and finds you the next duplex, right? You go buy that. Now you move into that one for a year.
For the second one, is it 100% as well?
Hey, heck yeah.
No
it is.
way.
Yes, it is. You can get 100% on the next one.
Okay.
Now, we may end up refinancing the previous one if we need to utilize your FHA or if it's in the same area or something like that. There could be some caveats to that, but yes, you can. So now you go into the second one, and now guess what? You're living in one. You have 3 doors.
Yeah.
Then but when you get to the end of the second year, guys, we're only talking 24 months.
Yeah.
Carlos finds you a third one. Now you've got 5 doors, 5 rental properties in 24 months, and you didn't come out of pocket. Speechless?
I know.
Right?
So okay. So what? Okay. What? How much money do you need to do this?
Well, like you said, that right now sellers are covering closing costs. We're in a really good market right now. So I'm pretty much guaranteed on your first one, Carlos is going to negotiate with the seller to cover your closing costs. Right. So you might need a couple thousand out of pocket to do your inspection and your appraisal and maybe your escrow deposit, right? So you need maybe $2,000-3,000, I would guess, out of pocket.
Okay.
Now, a caveat.
Which I can get you.
Well, she can get you.
So.
All right. Quick caveat. If you're a veteran, all right, hear me on this. You're a veteran, you can do this on a 2-unit, 3-unit, or 4-unit property.
Wow.
And you don't need money down. If you're a veteran, I know a friend, Tyler Sheff, great guy. That guy used his VA loan like 8 times. Yes, you can get more than one VA loan, veterans. He used it like 8 times. This guy's got like 10 rental properties, multifamily, and he used his VA loan for like 8 of them.
Yeah.
Okay. So FHA, VA, 2 great options.
So Frank, if we're doing, so let's remove that option off the table. Let's say I got money. Okay.
Yeah.
And I want to buy multiple properties, but I still want to use financing, and I want to put maybe 20% down, or, something significant so that I could get a good, percent back on my return or something like that.
So I'm gonna break this into I'm gonna put a line in the sand. Okay. All right. The first product I was talking about is we were using a primary residence loan because you're gonna live in one of the units, right?
Right.
Staying on that path. The way to get into a 3 or 4 unit property, right? Because now you buy 1 4-unit property, you live in one, you have 3 doors from day one. Yep. End of a year, you've got what? You've got 7 doors, right? At the end of, you could have that by 13 months. Okay. That product, you have to live in one of the units still. But Fannie Mae just came out with an awesome guideline that we follow. You can put down as little as 5%. So you said 20%, but I want to give you something better. Okay. You can put down 5% if you're willing to live in one of the units for a year, right? Okay. So that's your best option, your cheapest option, right?
So now if you don't want to live on it because you got the money to not have to do that.
Now we get to the guy who doesn't want to live in the property. He's already got his beautiful house in Cheval, and he's got his family. His family's like, I'm not living in a quadplex. You know what I mean? Heck no, honey. All right,
I don't want to deal with Section 8 housing.
No, I don't want to do that. So that's my Florida voice. Yeah. Every time I go north of I-10, that's when my voice changes to. So anyway, so if you have money, you've got your 20% down, you can just go buy the duplex. You can buy the single family right off the bat. You put 20% down. You don't got to live in one. The rates are a little higher. Here's another caveat. The rates are a little higher on the investment loan than they are on the primary loan, right? Okay. But wife tells you, I'm not living in the duplex.
That's right.
Then you're going to go put your 20% down. You're going to buy your duplex or your triplex or your quadplex. You do have to put a little bit more money down when you're doing 3 and 4 units, 25 and 30%. But that's a great way to do it. Now, where can you get the money from? How about an equity line on your primary house?
That's right.
Because chances are in that situation, you already have a primary house. So you go take out an equity line on that house, put the money down on the other house, on the multifamily that Carlos finds you.
Right. So I got a few people actually asking me about equity lines on your house. You just told me about a product right before we started this 7-day product.
7-day equity line. Yep.
Okay.
Now in reality, it's called a 5-day equity line. Okay. But I'm a king of under promising and over delivering, so I'm going to call it the 7-day equity line.
What are the requirements that you need on your home to do a product like this?
Equity.
Okay.
So here's how that works. You can get with certain products, you can get up to 90%. It's really 89.9% of the value of your house. So somebody the other day asked me how that works. Let's just use a $100,000 valued house for easy math for everybody. Okay. Let's say your house is worth $100,000 and they will give you, for easy math, 90% instead of 89.9. They'll give you 90% of that in an equity line. Okay. Well, if you owe nothing on your house, that means you can get $90,000 on a home equity line. Okay. But let's say you owe $50,000. Let's say you owe half, right? And they'll give you up to 90. They take away what you owe on the first mortgage. So that means you'll get 40. Okay. Right? 90 minus 50 is 40. You'll get 40,000. You can do this, guys, on even an investment property. It doesn't have to be your primary residence.
But you do need
Equity.
Yeah, but besides equity, the requirements that you need.
Got to be able to show your income.
Right. You got to have a job. You
Yep.
can't just, you know, they fired you and now you want money out of your house. That's not how it works, right?
No.
You got to have a job. You got to be able to basically show and prove that you can pay that loan.
Tax returns, pay stubs, W-2s. We actually, I don't think I've mentioned this, just opened up a bank statement second mortgage, which means somebody who's self-employed writes off too much on their taxes. They can show us their bank statements to qualify to get that second mortgage to get the money for the new house. So that's pretty deep. The other, let's say you're the guy who just doesn't have any way to prove his income, but you've got a crap load of equity in one of your properties, okay? And you want to buy another investment. That's when we go into hard money lending, okay? By the way, guys, contactfrankthebank.com is where I want you to go if you want me to give you a call. It is not an application. It's just a quick little lead form that tells me what you're looking to do, and then I will make sure we give you a call, contactfrankthebank.com. You do private money. So I could give somebody a loan with no income verification on a private money loan or an institutional loan on an investment property.
All right, Frank. So I have a friend. I have an actual scenario right here that is basically somebody that is about to take over his parents' house. His parents are ill. He wants to take over the house. The house owes $20,000 of mortgage. It's worth somewhere around $250 maybe.
Okay.
But it is damaged at this time. Not like super damaged, but enough to where maybe a 4.1 pass at this time. And he's looking to take out some type of equity loan that is going to help him reinvest in the house so that he can put the house, up to date in terms of whatever issues he has on the house. So what would be his best option on this actual scenario going on right now?
So question is, the parents own the home now,
Right.
And they're basically giving
Quitclaim
/
deed.
selling it
Yep.
to him. Okay. Your easiest, there's a couple different ways he could do it. They could actually sell it to him if he's a qualified buyer, right, with income, assets, not even assets in this situation because the family's selling because you get to use the equity when you're buying from family.
Okay.
But if he can qualify income and credit wise, then mom and dad could sell him the house. They could put the price for whatever they want, so he gets the money he needs.
Okay.
And then when they get the money, they hand him the money and he does the repairs and you're done, right?
Okay.
That's one way to do it.
Okay.
They could also potentially put him on the deed and he could take out an equity line. All right. That's another way. And then you do a deed transfer. The problem you run into there, Carlos, is that the parents are obligated on a mortgage for $20,000.
Right.
Right. So that's the slight complication here. We got to get that mortgage out of the parent's name. Okay.
Yeah.
So either
I think the sale is a good idea.
the sale, I think, is the right angle there.
In this case, he cannot afford a $200,000 home.
Okay.
But he might be able to afford $100,000.
Bingo. You nailed it.
Okay.
So we established two things is one, how much does he need to fix it?
Okay.
And what is he qualified for? So I would literally tell that guy, go to contactfrankthebank.com.
Yeah.
I talk to him. We figure out what he can qualify for as a buyer.
Yeah, we're gonna do that. I'm gonna talk to him right after the show.
Yeah. Beautiful.
All right, sounds good. Hey guys, so hey, a lot of good information here today.
Yeah.
I don't know. I'm already, because I like this stuff. It
His
makes
brain's
me
moving.
well. As a realtor, our job is to just connect things together, right? Connect people with the right lenders, connect the houses with the people, and the more you know, the more people that you know, the more information that you know, the better qualified you'll be to actually help these people, right?
Absolutely.
So when you give me all of this information, I really enjoy it. It really freshens me up, especially doing it every week and showing you guys that we're actually in it, going through it at this time. So subscribe to the channel, We the People Real Estate Podcast. Make sure you share, make sure you like, make sure you subscribe, hit that bell for your notifications. Guys, comment, leave us some comments.
Please.
On our YouTube video so that we talk about whatever products you guys may want to talk about, that be, mortgage products or real estate.
Yeah, give us your
situations.
topics. When you go in a comment, say, hey, guys, I want you to discuss this next week, and we'll happily do it.
Yeah, and we can do it anonymously, too. If you're going through a divorce situation or if you're going through hard situations, real estate is not always pretty. We understand that. Sometimes the bank's trying to foreclose on your house. what are your options? Maybe we can talk about that for you as well. So there's always different options as long as you're a homeowner, which is why I push everybody to just buy that first house if you can.
Please do.
Buy the first house. Do not rent if you don't need to. Do not, if you're making money, like I got people in my own family that are making good money and they decide to just rent, very luxurious and look very, live this lavish life right now that I'm like, dude, it doesn't matter. Like, just buy your first house and then you can buy your second or your third. By now, that person that I'm talking about right now, which is somebody I love deeply,
Do it now.
they could already have owned two to three houses if they would have started, not now, but 3-4 years
Just
ago.
remember, if you're renting, you are paying 1,000% interest.
That's right.
And you're paying somebody else's mortgage. Contact frankthebank.com. We'll reach out to you and help you.
And call me 813-406-9324. I'll help you pay yourself. Right, Fred?
Let's do it, man.
All right, guys, take care. See you on the next episode. Peace. Thank you so much for watching, everybody. This is We the People, a real estate podcast. Make sure to subscribe.